Alright guys, welcome to Chronic Harmonics. This video, I'm showing you how I do my charting. As you can see, it's 6:51 on a Sunday, 20th of August. So as you can see, we've got a large impulse from here to here. So if you get a fib, bottom of this impulse to the top of this impulse. So as you can see, price retraced down and hit the 618 and 66. Now that we know it's hit that, my next thought is, where is price going to go? Where would it most likely go to? So the first thing that I always do is use a fib retracement from A to our B. So we've done that. The second thing that I like to do as well is to use the trend-based fib. I find these two tools go really hand in hand. So if you do from the bottom of X, top of A, bottom of B. So as you can see right here, if I remove the 66 and the 618, the 786 and the 0.5 are close together. That's a bit of confluence within this region. The second thing that we can look at is key levels. So if you look right here, you can see this level that's been created, right? It's been created, got hit again, it's been respected. So there's a 1 hour order block that's been created here. This green candle. Remember, order block, the last up before we go down, the last down before we go up. So what we can do is grab this trend line and put it at the top of there. So as you can see, this area right here, it's our key area. We're looking for a reversal. Simply put, there's not enough demand, so price comes back down. So we got our C. The next thing that we're going to look for is our D. So what we do is, again, we get our fib retracement from the bottom of C, from the bottom of B to the top of C. Say for argument's sake, it's around here. Double click this, and then we're going to want the 1.272 and the 1.618. So as you can see, the fib retracement from X to A, I put the 786 there. These two are close together. It's really cool because if you look along here, you can see this 1 hour order block. Remember, the last down before we go up. So if you get another trend line and just slap it right there, there you go. So this is our key confluence area. So if we grab a XABCD pattern, this is how it will look like. There's our X. Our A is right there. Wait, give me a second. Our A is right there. B, C, and our D. Now this is called a Gartley harmonic. One thing that I want you guys to realize first and foremost is that on the weekends, harmonics in general don't follow the specific time required. Reason being is because it's the weekend, so the stock markets aren't open. The UK, American, Asian stock markets, they're all closed. So there's not enough money coming into the market. It's independent traders. Second thing is since we're trading on a Sunday, we have to realize around, I've forgotten the time, I think it's around 9 or 11 o'clock tonight UK time. That's when the Asian stock market opens. So my mentality is, as price pushes up, people are going to be jumping on that board. They're going to, our price is going to go up, let's invest now. However, the Asian stock market are like, you know what? Let's take their money, let's drop the market, take their stop losses, and introduce some liquidity into the market. And so this is where I think price will go down probably until tomorrow morning, and then it'll come back up. Last thing that I forgot to mention is, where is our targets? So we know our C to D target. Now where is our take profit target? So if we grab a fib from C to D, our hypothetical C's to D's, by the way, and just do the CC. CC means the champion channel. So the guy that I learned this from, these are the key points or the key levels to look out for: the 618 and the 66. So we're looking to do our long until here, or if you are doing that. So if you do that, put that there, that's our long position. That'll be our take profit one. And then let me just reduce this stop loss. Of course, the stop loss, you can have it wherever. Of course, as I am just showing you now what I'm doing, I'll put my stop loss here, but as I enter the actual trade, or if you were to actually enter the trade, you can reduce your stop loss. So right now it's a 0.12. That is quite small, but we can get that smaller if we do our sniper entries. Watch my last video, I'll show you how I do that. So of course there'll be our take profit one, and of course price may increase, decrease. We don't know what's going to happen now. We watch the charts, see what happens, and make our money. That's about it. So if you find this interesting, if you learn something new, then don't forget to like, comment, subscribe, and that's it. Take care, guys. Have a good week ahead.